So, Tesla's Q1 and 2026 earnings report just dropped, and let me tell you, it is not just about the numbers. What this really is a declaration of a massive strategic shift. The company is diving headfirst into one of the most ambitious and frankly most expensive transformations we've ever seen. From an investor's point of view, it's a massive multi-billion-dollar bet on the future. Let's break down exactly what that means. And really, this whole story, this entire strategy, it kicks off with this one statement from the earnings call. This right here lays it all out. This isn't just a casual comment about spending a bit more money. It's a huge signal to Wall Street. It says Tesla is more than willing to sacrifice its short-term profits to build a totally different kind of company. So what does substantial actually look like in dollars and cents? Well, here's the number, $25 billion. According to Tesla's own CFO, that's what they're forecasting for capital spending in 2026 alone. To give you some perspective on just how massive that is, that's more than the entire market value of many well-established industrial companies. This is a colossal investment that is going to completely redefine Tesla's financial landscape. Okay, so what does spending that kind of cash actually mean for the company's books, like right now? Well, the Q1 results really start to show this strategy playing out in real time, and the numbers, they tell a pretty fascinating story. All right, so if you just glance at these Q1 numbers, on the surface, everything looks pretty solid. Revenue's up, free cash flow has more than doubled, great. But, and this is the big but, the key number you have to look at to understand their future is capital expenditures. It absolutely surged up 67% year over year to almost $2.5 billion. This is the financial engine that's driving their transformation, and believe me, it is just getting warmed up. So here's the deal. This creates a very clear and honestly, a very deliberate trade-off. They're basically telling investors, hey, get ready for some red ink on our cash flow for the rest of the year. That's the short-term pain. But the long-term price? Well, that's a complete shift away from the ups and downs of selling cars to a future that's dominated by the steady, high-margin revenue of what they're calling AI, software, and fleet-based profits. And that right there, that prize, it gets us to the absolute core of this whole strategy. This massive investment, it's not just about building more gigafactories to stamp out more cars. No, it's a fundamental pivot in what Tesla even considers its main product. And this number, this shows you exactly why they're so confident they can pull this off. By the end of the first quarter, Tesla had 1.28 million active paying subscribers for its full self-driving software. That's a 51% jump in just 1 year. This is not some little side project. This is a rapidly growing, high-margin software business that just happens to live inside their cars. You know, this quote from the CFO is something you really need to let sink in. It might be one of the most important strategic statements a car company has ever made. Think about what he's saying. The car isn't the main product anymore. It's just the delivery mechanism. It's the hardware, right? It's like your smartphone. And it's designed to run the really valuable software, which in this case is FSD. This completely changes how you have to think about valuing this company. Okay, but this whole AI-driven future creates a pretty big problem. What about the millions of Teslas that are already on the road? The company is upfront about it. The hardware in a huge part of its fleet, Hardware 3, it just can't achieve full unsupervised autonomy. And that's not just a small technical issue. It's a massive logistical headache. So their solution isn't simple. It's this big, complex, multi-part plan. Yeah, they're offering some trade-in deals, but the real core of the plan is a direct hardware upgrade path. And to call this a simple service appointment would be a massive understatement. Musk himself talked about needing dedicated microfactories in major cities just to handle the incredible scale of retrofitting new computers and cameras on millions of cars. Now, to power this whole AI-driven machine, Tesla is going back to its classic playbook and just cranking it up to 11, vertical integration. They're doubling down on what they do best, which is taking control of their entire supply chain, right from the ground up, starting with the most basic component you can imagine. And it all starts right here, with the silicon. This is their brand new, custom-designed AI5 inference processor. You can think of it as the specialized brain for all their AI stuff. By designing their own chips, Tesla gets to control the very core of every product they make, from cars to robots. And it helps protect them from the chaos of the global chip market. But you know, just designing the chips, that's not enough for them. Through something called the TERAFAB project, which is a partnership with SpaceX, they're actually planning to build their own chips. And the logic behind it is pretty simple. They're looking ahead and basically saying, hey, In the future, our need for AI chips is going to be so huge that the entire global semiconductor industry just won't be able to keep up. So what do? They decide to build the factory themselves. And look, this isn't just some idea on a PowerPoint slide. This is happening right now on the ground. On the left, you've got site prep for a massive factory for the Optimus robot, and on the right, they're breaking ground on their new research chip fab. They are literally building the components of their future from the dirt up. So when we talk about that huge $25 billion number, this is where it's all going. It's not one single project. It's an entire ecosystem of interconnected and, let's be honest, wildly ambitious projects. You've got the autonomous Cybercab and the Semi, the Optimus factories, massive AI data centers, and even their own lithium refining and chip fabs. Every single piece is designed to support all the others. Okay, now for the reality check. As any smart investor knows, a bet this large is, well, it's a bet. It's never a sure thing. The potential reward is astronomical, but the risks are just as significant. And it is absolutely critical that we understand what those are. The challenges really fall into two main buckets. You've got the internal hurdles, things they have to get right themselves, stuff like executing these incredibly complex production ramps, what Musk calls the S-curve, and even tearing down existing factories. And then you have the external headwinds, stuff that's mostly out of their control, like a maze of slow-moving global regulations, potential trade tariffs on key parts from China, and of course, the general state of the economy. And this quote from Elon just perfectly sums up that internal execution risk. He's talking about ripping out the entire Model S and X production line and replacing it with a new one for the Optimus robot. To do all of that in just 4 months is, in his own words, insanely fast. That timeline leaves absolutely zero room for error. So let's put it all together. After looking at this enormous investment, the huge strategic pivot, and all the significant risks, what's the final takeaway? What's the verdict for an investor looking at Tesla in 2026? Here it is, the bottom line. Tesla is making a clear, conscious decision to hit the pause button on short-term financial performance. They are pouring every single dollar they can find into this radical transformation. They are betting the farm that the future profits from autonomy, software, and robotics will so massively dwarf today's car profits that this short-term pain isn't just worth it, it's absolutely necessary. Ultimately, the success of this whole thing, this trillion-dollar gamble, it all hinges on one thing: flawless, simultaneous execution of multiple world-changing projects. And so for investors, the question is simple, but the answer is anything but. Is this a visionary leap that will define the next century of industry, or is it a gamble that has finally become too big, too complex, and too far-reaching to actually pull off?